Hi there, Brock VandenBerg, fund manager for TaliMar Income Fund. Wanted to answer a common question that I'm getting from investors, and that is, hey, Brock, how do you raise money for your mortgage fund? So I wanted to answer that question, but I wanted to kind of go back and explain kind of the history of TaliMar Financial and our investors, and I'll give you a little more insight into how I raise money today. So when I first started the company, I was funding loans myself. I met up with a couple of investors that were buying houses at the foreclosure steps and started lending them my own capital. I did that for about 2 years. It went very successfully. But there became a point where I just didn't have enough liquidity to fund the loan volume that I was originating. So I actually went out to friends and family, and they invested alongside me on these loans. Now, keep in mind, this was more of a trust deed platform. For those not familiar with trust deeds, or the term trust deeds, that simply means a mortgage. And I was lending money as the lender on these properties, just like a bank would do. Now, when I went out to outside capital or outside investors, they would invest alongside me, and that became what was known as a fractionalized loan. So maybe I owned 50% of the loan. I had two other investors. Maybe each one of them owned 25% of the loan. And so you had 3 total investors on that loan, and that is what is considered a fractionalized loan. And had a really good platform providing fractionalized loans up through about 2020. And we got to 2020, we had about 45 to 50 million under management, but we quickly realized that as you scaled a trustee platform, it became increasingly difficult to manage your investor capital. You always had loans that were paying off. So an investor would get their money back. You would try to redeploy it in a new loan. But it became, because loan volume isn't completely equal every month, it was tough to always recirculate that investor capital into new loans. So we looked for a better way of doing what we were doing, but provide more consistency. And that was the mortgage fund. We launched TaliMar Income Fund in 2020. And we already had that head start. We already had 45 to 50 million under management. And a lot of those investors that moved from, or that were investing in individual loans, actually transitioned into the mortgage fund. And it offered, again, more consistency. There were some considerable tax benefits. You could reinvest distributions and earn compounded interest. And it was just much easier than having to constantly wire funds out, getting set up on a servicing platform, taking those payments, getting paid off, and then finding your next trustee. So a lot of our investors followed us into the mortgage fund model. Now, I bring this up because the number one investor in our mortgage fund actually has invested or currently invests in trust deeds, these individual mortgages. So, a lot of them already understand kind of what we're doing, what the thesis is of the mortgage fund, that we're securing a loan on a piece of real estate. We're earning interest income from the borrower, and we have that security of real estate. So trust deed investors already have that concept, and they're typically looking for just a more consistent and better way to invest. So number one is the trust deed investor, and we're constantly looking and talking to individual trust deed investors and telling them about our mortgage fund. Number two, word of mouth. And so a lot of investors at this point just tell friends and family what they're invested in. And what we find is a lot of the people that are new investors in the fund have been, the word of mouth have gotten out to them, and they're bringing their investor capital over as well. The number 3 way we raise money is we actually actively look for and market to trust deed investors. So we'll actually search county records to see who invested in an individual trust deed, and we'll reach out and let them know what our platform is. So those are really kind of the 3 main ways that we raise money. We typically raise about 3 to 4 million a month. That puts us around 40 to 45 million in a given year. Currently, we've got approximately 116 million in the fund. We originate approximately 7 to 10 million a month in new loan volume. So between the amount of money that we raise, the number of payoffs that we get in a given month. It essentially balances out to about the amount that we originate or fund in a given month. If you found this explanation helpful, please give it a like. Also, if you have not already, go ahead and sign up and subscribe to the TaliMar Financial YouTube channel. We post a lot of great content about the hard money space, about investing in mortgage funds and other content. So go ahead and give it a subscribe, and love to reach out. I'll go ahead and post some other videos as well about common questions that we get for investors, and I'll post that here in the near future on our YouTube channel. Thanks for taking a moment to watch.